Hi, it's Greg here, and I've got your Daily 5. Here's Microsoft, and one of the things, I was at a Billy Joel tour recently, and he said, you know how these bands come out with all their next album, and you never want to hear it? You just want to hear their good stuff. And he said, well, this is the same old tour. It's just the good stuff. And one of the things I'm still focused on here is the earnings coming into the second quarter, just to see how they'll respond. The earnings numbers are estimated to be a lot lighter, so we'll see if that holds up. But the one thing I wanted to talk about here is I've gone with mostly large caps to try and make sure that we have liquidity if we need to exit the stocks, and I think that's going to be particularly critical. So what we have here is Microsoft, and again, it's trying to break through these prior highs from the summer of last year and earlier in January. So again, we were here at the end of January and then all of a sudden dropped down, and we're back here, and now we're trying to make a move a little bit higher. So at least the chart is starting to move. The SCTR ranking is starting to improve, and we're seeing a lot of the mega cap names have strong scooter rankings. And the PPO is finally moving into positive territory. So this is a pretty nice looking chart if you're looking for stability, some growth. Again, the scooter ranking says its price action is behaving better than other charts. So looking at CRM, Salesforce, Salesforce has a lot of activists, investors in it. And just this week, it finally broke out above its consolidation. So have you missed the move? Well, only if you like chop, because 4 weeks ago you'd have been in this price bar and then you'd have chopped sideways for 4 weeks wondering what all the banking issues were going to do. And anyway, the stock held up nicely and has started to push to very close to 1-year highs. So that's pretty bullish. And again, you see the scooter ranking up nicely, relative strength starting to outperform the S&P 500, and the PPO is in positive territory and rising. So what's not to like about that? I think it's a pretty solid chart. One of the reasons I like it a lot is the activist investors. It's not just one in there, they've got 5 or 6 in there. And so that group can put a lot of pressure to kind of focus on shareholder value. And again, those people don't typically get involved unless they see a nice opportunity. So this one has a lot more smiles going for it than I would normally look at. But what I do like about the chart is there's obviously a lot of upside. The chart could literally go up 50% and not take out the old highs. So lots of room. Looking at Amazon, Amazon's obviously one of the more beaten down names, and they still have the AWS, and they have a lot of other business initiatives going on. But one of the things that's starting to perk up for me on this chart is the scooter ranking is trying to get off the floor. And typically when stocks get so beaten down, and it's been down there for almost 6 months, you can start to see it work higher. So again, this one was up more than the CRM ticker symbol or Microsoft, moving up nicely. And I think the reason, again, from a lower price point, the percentage gains are a little bit easier. What I don't like about the chart is the choppiness of it. Obviously, it's been very choppy and really hasn't gone anywhere. If you got into this chart on January 9th, you're up about $10, but you've lived through some pretty big misery. So it's a big chart change here. We're making a higher low. And what I'm noticing is the big downtrend in momentum is trying to change. And we'll see that on a few other charts. But that change in momentum, I think, is a pretty important trigger. I like the fact that the scooter ranking is starting to get out of bed, and then the relative strength downtrend, the really long downtrend, is still in place, almost 2 years. But what we're starting to see is a basing here. We're actually making higher lows, and that's a little bit more obvious on the Zoom panel. So looking across Amazon here, I like the setup, and one of the things that should happen if we are rotating into a new bull market, and we're now going to close higher again in March. So we are starting to get those signals. Again, it's all been in the last week and a half, so let's not feel like we're too far behind here. It's been a pretty rough, it was only 2 weeks ago that the S&P was touching where it started the year at. So then we've got Apple. And one thing about Apple that I like here is the chart really didn't break down hard during the 2022 period. It held up really nicely, and the big downtrend in momentum that I mentioned that we see on Amazon that's broken. We're just starting to see that same breakout on Apple. And as this chart starts to accelerate higher, we should see some nice liftoff. Now, Apple's got some virtual reality headsets. They're supposedly have the unmanned car or the autonomous vehicle. So we'll see if that can start to add to their bottom line. Again, they've still got lots of nice products and they're still able to get a premium for their laptops. So the chart held in really nicely. The iPhone lineup is still solid. Our scooter ranking's at 75, and if we can get some sort of pickup here, I think that would be an improvement. But again, it was one of the weaker performers this week. It doesn't mean it was terrible. It just means it wasn't quite moving with the same power to the upside. And lastly, I have Meta platforms. And one of the things about Meta, obviously, is it was down and out. And when it was hated the most, it was probably, literally the chart just gapped to the lows near late October. And then it's been riding up ever since. Even if you got into the chart at the end of January on that big move after the Fed, charts consolidated sideways, so it's not like you've missed a lot. I would just say you missed 6 weeks of waiting, and now all of a sudden it looks like the chart's finally starting to move out. Now, it is outperforming on relative strength. Again, I could have drawn a big downtrend line here, but that's broken. Much like Amazon with the beaten down scooter ranking for a long period of time, it started to work its way higher, and it's really done a nice job of now being one of the leadership stocks out there with a very high scooter ranking. So I do like that. And again, the PPO is back in positive territory. And if you look at historically on a stock, when you go back a long period of time, during their big uptrends, they're above zero. So it's on a weekly chart. And so what you're looking for here is that breakout. If I'd have drawn a downtrend on relative strength here, or on the PPO momentum, roughly the breakout down in here late December wouldn't have been a bad entry. It was also a breakout in price, but it doesn't have to work out that way like Amazon is right now. It's a good place to watch all of these charts. And again, I want the liquidity as I come through this earnings period to make sure that if stocks start to fail quickly during the earnings period, by the time you get to these charts, we can make sure we've got our stops in place and get out if the market is going to make a big leg lower. So there's not much I like in terms of the backdrop. But again, the investor sentiment was awful, and maybe we can just ride up on that for a little while. My strength index, I like it when it moves above 25%. It currently is at 26%, so it just started to break out here. It's been basing, or it topped out at the beginning of February and pulled all the way down, and is now starting to work its way higher. So if there's anything we can do for you over at Osprey Strategic, we have a $7 program that you can try everything we have. Go back and look at all of the work we did over the last period of time, and hopefully what you'll find in there is some stuff that can help you stay on top of the markets as it changes, and more importantly, protect capital if this big move up to the upside doesn't work out. And with that, thank you for taking the time to join me. Good luck with your daily 5. Enjoy the weekend. And we've got an end to the day, the week, the month, and the quarter all showing up here on Friday. So we should have some pretty exciting charts. Thanks, everybody. Bye-bye.